Top three things in my notebook this morning. Number one, the US dollar. Number two, gold. And then number three, all of Europe. First on the dollar. First, we have to contextualize the move last week. It was a down 1.8% move week over week, which is a big move for the dollar. It puts it at down 5.3% for the last month. And again, you have to ask yourself, what is driving this down dollar move? And the biggest part of the down move last week was on Wednesday, when the U.S. dollar, of course, went down very quickly on a very bad retail sales report. So once you overlay that with a very bad U.S. consumer confidence report in rate of change terms last week, which came on Friday, you had a down dollar week, which is, again, something that we think is going to continue ahead of the Federal Reserve meeting on June the 17th. The big winner on that was point number two, which is gold. Now, gold had its biggest week on an absolute basis in quite some time, but more importantly, had its biggest week relative to mostly everything else in macro. That includes commodities, currencies, equities, foreign, anything pretty much, foreign currencies, fixed income, etc. And again, that was making some sense because the number one thing that gold loves, and again, it's a dual stroke, it loves down dollar with down interest rates. So when interest rates started to back off, the dollar was already in motion on the economic slowdown, and there you had it, a big breakout week for gold. Now, can it hold what we would call the big breakout line, which is the trend level? Again, 1202, 1203. Yes, I think it might be able to if we're right into the June Fed meeting. So again, there's plenty of catalysts to come. Your catalyst, if you're long gold, is a slowing or stagflating economy, which I wrote about this morning in the early look. Now, finally, Europe does not like the outcrop of this, which is, of course, you get a down dollar, up gold, up euro. Up euro last week, up 2.3% on the week, up 7.2% actually in the last month. And you can see quite coherently that the European equity market does not like this at all. And again, this morning, the euro's a little higher than when I got up this morning at 4:30 Eastern time. The euro was a little lower, so now you got the Greek news, you got et cetera, that Europe, guess what, is lower for longer because it's slower for longer. And again, that's an interesting setup where the Europeans only really have one strategy, and that's for Draghi to devalue the euro. And I asked one simple question this morning in my final comment on my top three things. Where are you, Mario? Where are you? So that's it. Today's Upside Downside. Where is that guy? Have you seen Mario?
It's May, Keith. He's on vacation.
Oh, he's on vacation.
We'll see him in November.
I haven't heard the guy, seen the guy. I mean, I've seen him in Hedgeye cartoons, but where are you, big guy? I mean, come on out. You got some devaluation to do.